Hey everyone, and welcome back to Investing Talk podcast. Today we're diving into the Chinese stock market.
Oh, yeah,
It's been showing some serious strength lately, and
absolutely.
it's got us thinking, is China like the next big thing for investors?
Yeah, that's the million-dollar question, isn't
It
it?
really is. And one of the things that we're keeping an eye on is the iShares China Large-Cap ETF,
Right.
ticker symbol FXI.
Interesting.
This ETF has racked up close to 22% returns since the year started,
Wow.
outperforming even the S&P 500.
Impressive.
So we're going to break down, whether or not FXI deserves a spot on your watch list.
Sounds good.
We'll be looking at the technicals, recent news, and broader market trends to help you make sense of it all.
Okay, let's do it.
First, let's zoom out and look at the big picture.
Mm-hmm.
The Chinese stock market as a whole is looking pretty strong.
Yeah, I'd agree with that. We've seen some really strategic moves from Chinese
Oh,
regulators.
really? Like what?
Well, things like curbing short selling and boosting state-backed share purchases,
I see.
those have definitely given the market a boost.
It's fascinating how these government actions can have such a ripple effect.
Yeah.
But it's not just a China thing, right? This resurgence in Chinese ETFs is part of like a global shift.
Exactly. While the S&P 500 has been holding steady,
Mm-hmm.
partly because of the election results and, that predictable Federal Reserve rate cut,
Right?
we are seeing a broadening of the market.
Oh, interesting. What do you mean by that?
Well, the top 7 S&P 500 stocks aren't driving returns as much as they used to.
Ah, so investors are looking beyond the usual suspects.
Yeah, and that's where something like FXI comes in.
Right, providing exposure to a market that's showing some serious potential.
Exactly.
Now let's zero in on FXI. On February 18th, 2025, it has some interesting price action.
Okay.
It fluctuated between $35.07 and $35.57 before closing at $35.30.
That's a 0.74201% increase for the day.
Not bad. And the volume that day was huge. Over 82 million shares traded.
Wow.
Way above the average, which suggests that people are definitely paying attention to FXI.
That volume surge definitely shows increased interest.
But even with this momentum, things can change quickly, right?
Oh, absolutely. The market, it's unpredictable.
Right.
And the decreased implied volatility and open interest that we've seen between January 17th and February 21st suggest reduced market uncertainty.
Okay, so you mentioned implied volatility and open interest. Can you break those down for our listeners who might not be familiar with those terms? What do those indicators actually tell us?
Sure. So implied volatility basically reflects the market's expectation of how much an asset's price will move.
Okay.
High implied volatility usually means that investors are expecting some big price swings,
Mm-hmm.
and low implied volatility suggests that they're anticipating less movement. Open interest, on the other hand, tells us the total number of outstanding options contracts for a particular security.
I see.
And a decrease in open interest can signal that there's waning interest or uncertainty.
So in the case of FX, this decrease in both implied volatility and open interest suggests that the market is feeling relatively calm.
It's one interpretation, yeah.
It's just one piece of the puzzle.
Right.
Now, I know that some people hear the words technical indicators and they kind of tune out,
I get it.
but they can actually be really helpful, can't they?
Oh, they're super helpful. They provide insights into the momentum, potential reversals and overall trends.
So let's take a look at some of the key indicators for FXX as of February 14th, 2025.
Okay, so we've got the majority of the moving averages.
Okay.
The 5-day, the 10-day, the 20-day, the 50-day, the 100-day, and the 200-day exponential moving averages.
Those are a lot of moving averages.
Yeah, they're all giving us buy signals.
Interesting. What else?
The trend strength indicator.
You mean the ADX?
Exactly. The ADX is also in buy territory at 17.5.
So a lot of buy signals. That sounds pretty promising.
It does, but we also have to consider the sell signals.
Oh, okay. Like what?
The MACD indicator is at 0.8.
Okay.
And the Commodity Channel Index, or CCI, is way up at 136.24.
What does that tell us?
Those are both suggesting that we might be in an overbought situation.
So we've got some mixed signals here. What should our listeners make of that?
Well, it's not necessarily time to panic or abandon ship.
Okay.
It just shows the importance of taking a balanced approach.
So we're not hitting the buy button just yet. What should we be doing instead?
Based on the analysis from Seeking Alpha, I'd say a hold recommendation is probably the most appropriate right now.
Okay, a waiting game.
Yeah. We need to see how FXI's price moves in relation to its support and resistance levels.
So what are those levels?
The classic pivot points are showing resistance levels at $34.48. $34.80 and $35.23.
Okay.
The Fibonacci pivot points are indicating resistance at $34.33 and $34.51.
So we need to watch those price levels closely.
Exactly, and wait for those technical indicators to give us a clearer signal before making any moves.
Got it. Now, while we're waiting, there's some interesting news about high options trading volume for FXI on February 14th.
Oh, really?
Yeah, with call options making up the majority of the transactions.
That's worth noting for sure. Options trading can really give us insights into investor sentiment.
Right.
And the high volume of call options could mean that some investors are feeling bullish about FXI.
Interesting. So we've got these technical indicators that are giving us mixed signals,
Right.
but there's this buzz around the options trading.
Yeah,
Seems like people are really watching FXI.
they definitely are. And there's more news that might be contributing to that.
What's that?
Well, reports are saying that global hedge funds have been pouring money into the Chinese stock market.
Really?
Yeah, at the fastest pace in months.
Wow, that's a pretty big vote of confidence.
It is, and then we're also seeing some exciting developments in the tech sector.
What do you mean?
Well, Tencent's WeChat is integrating with DeepSeek.
I've heard of that.
It's creating a lot of excitement in the TMT and machinery industries.
So it sounds like there's a lot of positive momentum building in the Chinese market.
Yeah, there's a lot going on.
But I know you always like to look at all sides of the story.
Of course.
Are there any potential downsides or risks that investors should be aware of?
Well, yeah, there are always risks associated with any investment.
Right.
Especially when it comes to the Chinese market.
Okay, so let's talk about those risks. What should investors keep in mind?
Well, insufficient stimulus from the CCP could put a damper on economic growth.
Makes sense.
Geopolitical tensions are always something to watch.
Right.
And, any potential military conflicts could really shake investor confidence.
It's a complex landscape.
It is. And then there's the global economic picture. If inflation, wage growth, and economic growth all remain strong, we could see the pace of interest rate hikes increase.
And that could affect markets around the world.
Exactly, including China.
So there are some potential headwinds. It sounds like staying informed and being aware of these risks is really important.
Oh, absolutely.
All right, so we've covered a lot of ground. We've looked at FXI's recent performance, analyzed those technical indicators, considered the broader market trends, and talked about some potential risks.
We have.
We also saw how news about options trading and hedge fund activity can impact how investors feel.
Right.
But before we wrap up, I want to dig a little deeper into FXI itself. Let's talk about its composition, the companies it holds,
Okay.
because that can give us some clues about where it might be headed.
Absolutely. And I think that's a great place to pick things up in the next part of our show.
Sounds good. So join us next time on Investing Talk Podcast as we delve into FXI's holdings and what they reveal about the future of this ETF.
See you then. Welcome back to Investing Talk Podcast.
So before the break, we were just about to take a closer look at, what's inside FXI?
Yeah.
Like, what companies does it actually hold?
Right.
And how can that help us understand its potential?
Exactly.
So let's start with the basics.
Okay.
What are some of the key metrics that stand out to you when you look at FXI?
Well, one thing that jumps out is that it's trading at a historically low multiple.
Oh, really?
Yeah, like roughly 11 times earnings.
Wow, that's pretty low.
It is. And it also has a price-to-book ratio of 1.25.
Now, for our listeners who might not be as familiar with these terms,
Sure.
Can you explain what that means?
Okay, so the price-to-earnings ratio, or PE ratio, compares a company's stock price to its earnings per share.
Mm-hmm.
And a low PE ratio could suggest that the ETF is undervalued.
Okay, so we might be getting a bargain here.
Potentially. And the price-to-book ratio, or PB ratio, compares the ETF's market value to its book value,
Right.
which is basically the value of its assets minus its liabilities.
I see.
A low PB ratio, like we see with FX, could mean that the market isn't fully appreciating the ETF's assets.
So both of those metrics are kind of pointing towards this idea of undervaluation,
Yeah,
which could be a good sign for investors.
exactly.
But we need to list beyond just those numbers, right?
Of course.
What about the specific sectors that FXI is invested in?
Right. So FXI is pretty heavily weighted towards three main sectors.
Okay, what are they?
Communication and technology,
Mm-hmm.
consumer discretionary, and financials.
And these are all within China, right?
Yeah, all within China.
And those sectors are like major players in the Chinese economy.
They are.
And they're all poised to benefit from China's growth.
Exactly. Improved dynamics within China?
Like what?
Well, things like government stimulus, technological advancements,
Right.
and rising consumer spending.
Those are all positive factors.
Yeah, they are. And they're expected to boost GDP growth, corporate earnings, and ultimately stock prices.
So FXI is well positioned to ride that wave.
It seems that way.
But are there any nuances to consider
Sure, there always are.
when it comes to FXI as a sector exposure?
Well, one thing is that while FXI has exposure to tech, it might not be perfectly aligned with some of the specific tech names that are predicted to do really well in the next few years.
So it's not a perfect representation of the Chinese tech sector.
Right.
What else?
And another thing is that its focus on domestic consumption might not be as high as some investors would like.
Okay, why is that?
Well, with the growing middle class in China and, increasing consumer spending,
Mm-hmm.
some investors are specifically seeking out ETFs that have a stronger emphasis on that sector.
So FXI is a good option for like broad exposure to the Chinese market.
Yeah,
But if you're looking for more targeted exposure,
right.
you might need to look elsewhere or maybe complement FXI with some other investors.
Exactly. Diversification is always key.
Absolutely. And speaking of diversification,
Yeah,
it's important to remember that FXI is just one piece of the global investment puzzle.
right.
So while the Chinese market is showing promise,
Mm-hmm.
are there any other areas that investors might want to explore?
Yeah, definitely. I mean, based on what we're seeing from firms like Mercer and BlackRock, Japanese equities are looking pretty attractive.
Oh, interesting. Why is that?
Well, they have strong corporate governance
Okay.
and a very supportive economic backdrop.
Japan has been kind of under the radar for a while, hasn't it?
It has, but there are signs that it's picking up steam.
Got it. What else?
REITs are also worth considering.
Those are real estate investment trusts, right?
Exactly. They offer exposure to real estate.
Which can be a good hedge against inflation.
Exactly. Especially with inflation still a concern.
Makes sense. Anything else?
Then there's Asia High Yield, or AHY.
AHY.
Yeah, it's offering some appealing valuations right now.
What exactly is AHY?
So AHY refers to high-yield bonds issued by companies in Asia.
Okay.
They typically offer higher yields than investment-grade bonds.
But they come with higher risk.
Right. It's a trade-off, higher potential return, but with higher risk.
Got it. So it's about finding that balance.
Exactly.
What about for investors who are looking for even more diversification?
Well, frontier market debt is an area worth exploring.
Frontier markets.
Yeah, those are the markets that are even less developed than emerging markets.
Okay.
They often offer higher growth potential.
But also higher risk.
Right. It's all about finding the right fit for your risk tolerance.
So we've got Japan, REITHY, and frontier market debt.
Yeah,
Lots of options out there.
there are. It's really important to do your research, understand your risk tolerance, and maybe talk to a financial advisor.
Great advice. Now, before we move on,
Sure.
I want to touch on something you mentioned earlier about underperforming stocks.
Okay.
You said that this year's underperformers could be next year's superstars.
Right.
Can you explain that a little bit?
Well, sometimes the market overlooks certain companies or sectors,
Okay.
maybe because of temporary factors or just negative sentiment.
Mm-hmm.
And these companies might have strong fundamentals
Okay.
and potential for growth.
But they just haven't been noticed yet.
Right. They're kind of hidden gems.
Interesting.
And if investors can identify these undervalued companies early on.
They could potentially benefit when the market catches up.
Exactly.
It's like being ahead of the trend.
That's the idea.
So we've talked about FXI's composition,
Mm-hmm.
its potential for growth, the importance of diversification,
Right.
and even looked at some other investment opportunities. But before we wrap up, there's one crucial aspect we need to address.
And what's that?
Risk.
Yes, risk. Every investment comes with risks.
So let's talk about some of the potential pitfalls that investors need to be aware of
Okay.
when it comes to FXI, the Chinese market, and investing in general.
Right. Well, with FXI, specifically, investors should definitely be mindful of political and economic instability in China.
Okay, why is that?
Well, government policies can shift quickly,
Right.
and any geopolitical tensions can definitely impact the market.
Those are some serious factors.
They are. What about the broader Chinese market? Any risks there?
Well, it's still a relatively young market,
Yeah,
and it can be volatile.
true.
Things like regulatory changes, currency fluctuations, and economic slowdowns can all have an effect on investments.
It's not for the risk averse.
Definitely not. And what about risks that apply to investing in general?
Well, there's always market risk.
Right, the risk that the whole market goes down,
Exactly. Then there's inflation risk.
which is basically your money losing value over time.
Right. And then interest rate risk, which can affect bond prices and other fixed income investments.
So basically every investment carries some level of risk.
There's no such thing as a risk-free investment.
Right, it's about understanding those risks and making decisions based on your own comfort level.
Absolutely.
Okay, so we've covered the potential rewards
Mm-hmm.
and the inherent risk of investing in FXI, the Chinese market, and beyond.
We-
Now, as we wrap up this part of our episode,
Yeah.
what are your final thoughts for our listeners?
I think the Chinese market offers some really interesting opportunities for growth,
Hmm.
but it's important to be balanced and recognize both the potential and the risks.
great point. Investing is a marathon, not a sprint.
Exactly. Stay informed, be curious, keep learning.
Those are words to live by. All right, so welcome back to Investing Talk Podcast. We've been spending some time with the iShares China Large-Cap ETF, FX,
Right.
trying to figure out, if the Chinese market is the next big investment frontier.
Yeah, we've looked at its recent performance, done into those technical indicators,
Right.
and even considered like the bigger market trends to see where FXI fits in.
And we talked about that exciting growth potential
Yeah.
in sectors like technology,
Right.
consumer discretionary, and financial.
Exactly, all sectors that FXI gives you exposure to.
But like with any investment,
Yeah.
there's always another side to this story.
A-
We need to be aware of the potential risks, too.
Right, we talked about how things like political and economic instability in China could have an impact, and things like regulatory changes and currency fluctuations, those can't be ignored.
And we emphasize how important diversification is.
Absolutely.
Looking beyond just FX
Right.
to other opportunities like Japanese equities, REI, TAs, Asia, high yield, and even frontier market debt.
Exactly.
And we even touched on those underperforming stocks,
Right.
how those hidden gems could potentially become tomorrow's stars.
Yeah, sometimes it pays to be a little contrarian.
I like that. So for our listeners who are maybe thinking, okay, this Chinese market sounds interesting, but where do I even begin? What advice would you give them?
Well, first and foremost, I'd say educate yourself.
Okay.
Do your research,
Right.
understand how the Chinese market works,
Right.
what drives its growth,
Yeah.
and what are the potential risks.
Don't just jump in because someone said China's hot right now.
Exactly. You got to make informed decisions.
Right. Read articles.
Yeah.
Listen to podcasts like ours.
Of course.
Talk to financial advisors.
to get a well-rounded perspective.
And remember, there's no one right way to invest.
Absolutely.
Your strategy should match your own goals,
Mm-hmm.
your risk tolerance, and your time horizon.
It's about finding what works for you.
And I think that's a great takeaway from our conversation today.
Yeah.
The Chinese market and FX, I specifically offer a really interesting opportunity.
They do.
But it's crucial to approach it with balance,
Right.
a healthy dose of curiosity,
Mm-hmm.
and a commitment to keep learning.
I couldn't agree more.
So we hope we've sparked your interest
Yeah.
and given you some things to think about.
Absolutely.
But now it's up to you to take the next step.
Right.
Dive into the research,
Yeah.
explore those different investment options,
Mm-hmm.
and see how they might fit into your own portfolio.
And as always, we're here to help you along the way.
So keep those questions coming.
Yeah.
Share your insights with us.
Absolutely.
And let's keep this conversation going.
Sounds good.
And don't forget, if you enjoyed today's episode of Investing Talk Podcast, hit that subscribe button.
Yeah.
Leave us a comment and share it with your friends.
Let's spread the knowledge.
Absolutely. Thanks for tuning in, everyone.
Until next time, happy investing.